in the room. Could Laszlo and Kirk put your hands up? All right, so one here and one right up the back. So Laszlo at Origins Next doing some great stuff out of KPMG. Origins Next has grown into its own thing and doing a lot of great stuff in the supply chain space, showing how blockchain actually is not just like a nice to have, it's needed. They can't do this kind of stuff based on the regulations that they've got without blockchain. It would have been in the too hard basket. Laszlo is making it easy. Speaking of making it easy, you would not have Ethereum where it is had it not been for the work that Kirk and team are doing in the research space and also the cybersecurity stuff that they do at Sigma Prime. They created software like Lighthouse that runs 30% plus of Ethereum nodes. I think it was like 30% was the the Goldilocks zone there, but it's grown a little bit more. But you know, a lot of interesting stuff from Aussie founders, and that's what we wanted to showcase. You'll see more of that and get to speak to them because they're right here. This Friday, there is something called the Stand with Crypto Pitch Night, and there's a virtual pitch competition. I am judging on one of those, as well as like a few others from the space. So some interesting stuff. Thank you, Chris. Chris up the back helps us out. We would not be able to do all of this without Chris, so we do thank Chris as well. Yes. Alrighty. I do like putting Chris in awkward position. Sounds bad, but anyway, Chris is good. All right, and Chris and I do an AI podcast as well. We'll shout out about that later. Fableration, who's one of our sponsors, had their launch a month and a bit ago, so just highlighting them. So this is another example of where blockchain is being used to help a space, not just like for the investment side's great, but this is blockchain being used to get authors and writers paid faster. So instead of waiting months, weeks, longer to actually get the royalties from your books, imagine that you write a book and through publishing it through Fableration, you get paid as soon as someone buys it at the airport, at a bookstore, off Booktopia. These sorts of things are where blockchain innovation comes in and frankly is quite interesting. It was at the State Library of Victoria. Really great spot. So well done to them and their sponsors Cloud Tech and others to help out. Updates, you can scan that QR code. So if you're into creative writing, if you're interested in, actually, you know what's interesting? They had 3 Bitcoin to give away in prizes. One for a short story competition, another one for a hackathon that's being worked on, that's being pushed back a little bit, but still out there. And then there was another one for some other things that they're doing. But imagine that just from getting involved in these things. Even the short story one, like they had a competition every day, like a 6-word story, like Aus DeFi good, TradFi is bad. I don't know, like whatever, like those 6-word stories, people were winning 100 USDC every day for a little while. I think that's paused for now, but the short story competition will be announced in terms of the winners soon. So, you know, some great sponsors out there doing this sort of stuff. The Blockies. So it used to be called Blockchain Australia. Now it's called Digital Economy Council of Australia. They've got their industry awards at the end of November, so you can see that down in Melbourne. South by Southwest Sydney, when Arturo does arrive, he doesn't appear to be here, but we'll talk about what's going on in that. So we had a talk. It was probably one of the only blockchain talks during the whole kind of thing, which is a shame, but you know, it just shows that there's a lot of people that are interested in the AI side of things, and that's all great and all, but AI will not be, and you can ask me for my opinions about this, AI will not be where it could go to with the guardrails and being able to have like stronger databases and immutable records that it needs to prove things without blockchain. So interesting stuff there. We spoke about Project Acacia. When he does come down, we'll talk about that a little bit more. Hands up if you know of Kraken. Hands up if you have heard of the Crypto Castle. A few. Good. The founder of Finder, Fred, that's a alliteration kind of thing there. He had his place. It used to be called Coogee Castle when he bought it a few years ago. He's into crypto. It's got to be the Crypto Castle. So Finder, along with Kraken, put on an awesome event. And thanks to Marina here for the photos that I borrowed from your LinkedIn post. I had some, but you know, better ones here. So really great event. I didn't get to stay that long that night, but a lot of like great people, a lot of great networking. Some people in the room were there. So really cool stuff. More of that. We had a competition last month to actually get people into that. So more competition, prizes, activations from sponsors like Kraken and Block V. Ian, I think, is somewhere here. Ian up the back from Block V. They do some cool stuff. Block V's done some cool stuff with OKX and others. They'll be doing some stuff with us in Kraken, hopefully soon, about activation. So getting you rewarded for coming along to events like this. I wanted to share this one here. This is the interactive newsletter. So hands up if you were receiving our LinkedIn or our Substack newsletter each Monday. Okay, a few of you, very good. They're great and all, but you have to wait until the end of the week for that. If you go to defi.org.au, and let's just do that over here in a new tab. If you go to defi.org.au, you log in, free to log in, sign up. I'll just go in here, if you can create an account. Behind the scenes, there's a whole heap of stuff. There's an AI chat with a few documents. There's a community list of events. Even this event is up here. If you go in, and it does work on mobile, you can put in things like asking guests questions. We'll try to answer it during the thing, otherwise after. But, you know, we'll take account of those. You can submit anonymously. You don't have to put your name down there. But more importantly, instead of waiting till the end of each week, and we do a lot of stuff in the AI space as well. My day job is in that space. On the insights page, what you've got here is each week for the last couple of weeks, instead of just being a newsletter that you have to wait till the end of the month to have, now you actually get an interactive newsletter. So you can click on the things that are here. So ASIC and digital asset regulation, there was some interesting insights on Info 225 from them. You can click to read the original article. You can read the shorthand one here. We do videos as well. So this is like HBAR announcing some ETF update stuff here. You can click to watch the video. More importantly, great that we collate it, but if you profile yourself, there is a profile section in the menu and you click get summary. And I'm going to improve this, but this will write up a summary based on what we're putting in. So far, Lydia and I are the ones that are putting news in there and collating that. But I want this to be a hyper-personalized kind of thing for you. And Arturo is there at the back. I saw the middle finger. Thank you. But I wanted this to be something where whether you're on your mobile or you're on your desktop and you just want to see what has been going on in the space, you don't have to wait till the end of the week. We'll summarize it for you. Like I said, you profile yourself. You'll get more detailed kind of summaries just for you, using the power of AI to educate about what's going on in the space. So cool stuff there. I think it's cool anyway. Another thing, when you have these events and we get to film, thanks to Chris, we actually put these up online. I didn't have the last one. I do need to update it in here. But imagine that you can be watching an event like this, right? And whilst you're watching, oh my God, it's me again. I'm not wearing a hat this time. And different speakers. Anna is here. She shared some research. Anna, where are you? Hands up. Yep, Anna from Core Data did some cool research. We had her on podcast. You can watch this presentation and I can ask questions. I can go, tell me about the research from Anna. Let's see if it's good. Let's hope the demo gods like work. There we go. Okay, so there, you can get some insights into what was spoken about. So whilst you're watching the video. And you can ask a simple FAQ. You can get a simpler explanation, like we'll make it easy. I'm always keen on feedback from this. Some of the features on the Aus DeFi website, such as the resources things, so explaining crypto, this thing we call Textionary, because someone said, well, I don't know what zero knowledge proofs are. Can you explain it to me like a beginner? Cool, click that button there. You can type something in. You can even put in a full-on article and just get AI to help you. We really want to break down education and advocacy in the space because these things are needed if blockchain is going to thrive, okay? So going back to it, the insights page, check that out. Every day there's going to be updates at the end of the week. We'll still put out the newsletter on Substack and LinkedIn, but we'll push people towards this. So back, not acronym, but the colloquial term for critiques in this space. And we've had many in the blockchain space. AI thinks they've got critiques. It's like, welcome to blockchain. But the reason we've got this is if people have things like, hey, RWA tokenization has no benefits. There is a feature in the website using AI and using a whole list of evidence that we've gathered to support the space. When this generates a response, not only is it just making it up from the AI, it's not doing that, it's using resources that we've collected with links and arguments. It breaks down what the critique is into its sub-arguments. And then it actually, as we go further down, you see links to actual supporting evidence that we're curating and collecting all the time to add and help support. So if it's for work, if it's just for friends, or if it's just like you see something interesting on LinkedIn and you want to fight the FUD, then we've got something there on the website and you can try it out there. And on defi.org.au. Like I said, it works on mobile and better on desktop, definitely. On that note, tonight's guests, I have 2 in the room and a third hopefully dialing in, but we'll see. What we've got is Arturo giving us updates about Token 2049 and a few other things. And then some great insights from Vincent, founder and chief scientific officer at Redbelly. And then we'll see if Lisa is around. But if you don't mind, Arturo, get out of the matrix and the code and let's get up on stage. I don't know why they're cheering for you though.
Just don't know.
All right, if you want to sit over there. Good, Chris? Good. Okay. Alrighty, let's just move to that. Couple topics. Token 2049, we'll talk about that. Project Acacia updates, what you can share. And then the South by Southwest Sydney talk, and just anything you want to rant about. Like if Arturo's got an opinion, he will, you'll get it. Anyway, Token 2049, hands up who has heard of Token 2049 in the room. Hands up who's been to Token 2049 in the room. Okay, a few of you, others FOMO, I get it. It's I had FOMO this year, I didn't get to go. We went in 2023. That was a lot of fun. What was it like this year? Going back for a second time, because you had your cherry popped seeing it in 2023. What was the experience like? I've got away with words. In 2025.
Well, the second time isn't as special ever.
Okay.
But I think that when we went, it was DeFi time, right? So it was just a bunch of projects talking about DeFi and how it's going to change the world and so forth. Last year when we didn't go, it was all about memes. And then this year, interestingly, was much more payment, stablecoins, and AI related. So I think that obviously Token 2049 is more of a it's a place where you get to see where the overall sentiment, let's say, of crypto is. And this time it was much more fintechy. It was much more utility based, let's say. It was people trying to sell a service, and they didn't talk about decentralization in the same way as they did during the DeFi time. It was much less, let's call it, zealot about a lot of these Web3 principles, and it was much more about just get a product out there and hopefully people use it from a utility standpoint. Now, that being said, I didn't find a thing that I thought. Don't get me wrong, lots of very cool things, but I didn't say, oh, I'm going to sign up to this thing because it's going to really solve a specific problem that I have. So I'm not sure if product market fit is there for most of it still.
So you're saying the conversation matured, which is good because I think we've seen that, like having conversations with, blockchain and crypto and all that doesn't exist in a vacuum. The investment side needs to have product utility backing it. And sure, you can have all the hype and stuff, but that is so short-lived and only for insiders. And it's very close to a big, triangle shaped thing with a square base. But, on the maturing conversation, do you think that there was more traditional businesses looking at blockchain as a way to help replace things, help improve processes? Or were they looking at more as like, hey, I see Michael Saylor and MicroStrategy change the strategy. I want to do more investment in the space and make money that way. Was it more of the investment side or the actual infrastructure and efficiency?
You had keynote speakers that were very, very unapologetically shilling their bags, right? It was people saying, well, Ethereum is going to change the world. I have bags in it, and we're democratizing this and that, and they were selling a bunch of bullshit. And I think that it was acceptable. Like people just know that that's what they do and that's what they say. Um, but then you had the people that were actually presenting a product that they had built themselves, and that was much, much more utilitarian, right? So it was a pretty cool project that showed how they bought through an app using an AI agent a product online. and they obviously did that through stablecoins. And there was no talk about self custody or this. It's not regulated, or it's this, or it's that. It was just really a fintech product that used a blockchain as a means of payment because it was stablecoin related, right? So stablecoins and tokenization were most of the actual chat, to be honest.
The side events that are there, so if you don't know, they have like 1,000 side events, and it's like so hard to get into if you didn't already book in. And a life hack for anyone that is going there next time, even before the tickets are out, if they've already got side events published and they're free to go to and you don't need to prove your ticket, just sign up for them. You might as well have quite a few of those already hooked into before you book your flights, a hotel, and even, you know, token 2049 ticket, because we made that mistake last time, had to convince our way into various kind of events and stuff, and it makes it harder. But was there value that you think out of the side events? Like, because the last time we were there, there was a lot of networking going to these things and like finding out people that are working in the space, and it turns out there's a connection to what we could be doing here. Did you find value?
Yeah, most of the value actually comes from the side events because the main events are about uh, well-funded projects talking about what what they're doing and selling their service. So you're kind of paying to be marketed to because the tickets are not cheap. But the side events, on the other hand, they are much more, let's call it social. You get to build those connections in a much better way, I would say.
Okay. What was a highlight for you from the overall kind of conference? And you can't say the Formula One.
Uh, I think that it was how serious some of these players actually were. And what I'm talking about is these larger, let's call it institutional players like Circle and so forth. They were presenting at a banking level type of refinement in terms of their products, their language. They were really selling to institutional high end, which was very, very different to what we experienced. That was, I mean, you having a conversation about raising capital anonymously was still something that happened back then.
Yeah.
That's not the question now, and now it's not about how you live in that Web3 ethos. It was really about how you integrate into the actual regulatory constraints that traditional finance has, which
Did
was quite interesting.
Did you see anything out of all of that that you think was like the most advanced compared to what you've seen going on here in Australia? Like in terms of real actual usage, not the hype, not something that, hey, it's great that BlackRock's doing stuff, but when you look into the details, it's not quite, you know, decentralized, or there's like, it's not so straightforward. There's a lot of hype in this space just because of the name. What I'm trying to get through and cut through to for the audience here is, did you see anything over there that technically, fundamentally, from a business value, you could have the most advanced technical side of things for AI, blockchain, anything, folks, but unless there's a business value, it don't make no sense, right? But something that really ticks the boxes in a few of those, was there something interesting from another project you saw?
Yeah, to be honest, I think that the most interesting thing was one of the uh, maybe even most boring solutions, which was looking at how Bridge, for example, having been acquired by Stripe, just cut through the bullshit of what it is. And it is a fintech service. It's licensed. It does the on ramp, off ramp because it has all of the connections to Stripe and so forth. And it was very simple from a product point of view. It was, well, if you want to build your stablecoin, if you want to build your tokenized payment service, and you want to connect to fiat rails, then here's the API, and we'll KYC you. We will check that you have the right licensing because there are all of these different requirements. But it's there and it works, and it's like a Stripe, but it's connected to Web3, and that actually solves a lot of the problems that you find when you're building out a solution that you're meant to sell to the wider audience. And by wider audience, I mean people that don't have a wallet, but actually transact in fiat most of the time, right? Which is most of us.
I think it's interesting, just you mentioned like a Stripe for Web3 sort of thing there. We were in a time, and I think we knew it was going to be a short window for this to happen, especially given the size of the market growing. But you could literally say, I'm like Stripe for Web3. I'm like Uber for Web3. I'm like whatever traditional non-blockchain product for Web3. But now Stripe is the Stripe for Web3, or they're trying to be because they're investing in the space, and PayPal and Visa and MasterCard and all these things. So we are going up against that sort of thing. I think the behemoths will struggle because of the sheer size, and that's just physics, right? It's very hard to innovate given their sheer size. So there's still a chance for Web3 folks, right?
Yeah, well, I think that the term Web3 wasn't really used. It was more about tokenization, and there wasn't a separation between Web2 and Web3. It was more, these are the financial rails. Do we want to do this more efficiently using this new technology because it is a more efficient technology, but because it connects everything. So you start talking about that global market access in a way that Web2 makes it really difficult, right? A really interesting anecdote was the thought of building out a fintech today versus building it out, let's say, 10 years ago. And I think that one of the greatest examples there is just looking at Circle and Tether, and the fact that Tether is a $500 billion company, and the reason is because they have it's such an easy way to engage with customers, right? It's through that smart contract. And again, we're not talking about the regulatory aspect, but even if regulation was not a problem and you did that through APIs, it would be really difficult because there's so much work that needs to be done, even by developers, like going through all of the APIs, connecting to it, managing all of these exceptions and so forth that smart contracts kind of deal with, and it becomes really standardized. So that was actually a really interesting way of seeing how traditional businesses are looking at the way in which they can just increase or make better the way in which they engage with their customers, and increase TAM and so forth.
Okay, very good. Let's jump to a real project going on over here in Australia, and that is Project Acacia, the Reserve Bank of Australia, testing tokenized assets. Quick little history, and we spoke about this at our South by Southwest kind of talk, was the history of it. In 2021, they had Project, I think it was Project Atom, where it was a closed loop test, selected parties only. You could not apply. And then 2023, when we got involved with 14, 15 others, it was all about testing wholesale CBDC as well as some retail CBDC. But, they found from that, after their research, that wholesale is really the way to go. So a lot of the fear mongering that the government is going to, move the chairs, so to speak, and, just like try to get into your wallet and watch what you're doing. They're not going to do that because it's wholesale. But I think the interesting one for this was, well, how do they support? They know tokenized asset market is coming. They know the future of like finance and commerce is going to be there. Let's get involved in research and testing that along with digital finance CRC, which is great. How's it going so far? Or can you actually tell the folks, because like I think some may not know what project you're on, and there are some people in the room that are invariably involved in other projects as part of Acacia, so that's great too.
Well, we have the not centralized use case, where we're doing a value chain of securitization. And I think that just overall, the project itself, and I'm talking about the overall Project Acacia, on a global as a global benchmark, is really out there, because there are not many other central banks or countries that are actually pushing as far as the RBA is pushing, to control everybody's minds. So I think that it's a really special uh, occasion or thing to be a part of, because uh, they're really trying to push the boundaries in terms of getting people involved and pushing people, i.e., companies, to test tokenization in ways that it hasn't really been tested before. So an example I'll give you is that uh, for 90%, if not more, of tokenization projects that you'll see out there, it's about representing the register of the asset on chain. And what I mean by that is that if you have an equity, for example, you have a share register. Um, or if you have a fund, you'll have a unit register, which effectively is just an Excel sheet that says this is the owner and this is how much they own of this thing, right? Uh, that's tokenization for the most part. What is being tested, and we're testing this a lot, is about how you actually manage the life cycle of a product. So, for example, if you have a bond, it's not only about who owns the bond, but it's how do we pay the coupons for the bond, or the dividends, or how do we How do we manage the life cycle of a mortgage-backed security, which is, think of it as a fund that is paying the unit holders from mortgage payments on a monthly basis. So it's really that life cycle piece, which becomes a much richer experience in terms of tokenization, because you're showing how you can create a better product, not just how you can create a better way of holding the same old product that you were holding before. And that brings a lot of efficiencies in terms of communication between all these different value chains. I mean, securitization, you have the originator that needs to communicate with a trustee that communicates with someone like, for example, Austraclear, that sends coupons to all of the holders, and you'll have at least 5 different parties that need to reconcile and communicate, and that shared ledger is effectively that thing that makes communication so much easier, right?
Hands up here if you know what fixed income is, bonds, etc. Oh, there's a good deal more than I usually see. And for those of you that didn't put your hand up, that's fine. It's something that is a bigger market typically in any kind of country than the actual equity markets. And a really important thing that is being tested, and a lot of the Project Acacia work is looking at ways that we can improve fixed income, because it typically has been a space that they used to do something called over the counter, which is just trading like almost like peer-to-peer. It's not electronic, etc. So there was a lot of things that blockchain could do to help there, and bonds was like a really good area. But it's not just that. There's so many other areas where, and Laszlo spoke about how it's helping this tracking and tracing of supply chain stuff. But this is where real value is like coming from. What comes from this? Where do you? Because not only are we seeing that the RBA and DFCIC are running these pilots, but for the first time they're getting like a council together, an industry advisory group, not guild. They should have said guild. It's blockchain, right? But an industry advisory group. From being in that, being part of Project Acacia, the the ASIC stuff as well that we're part of, digital advisory kind of panel, and all these like advisory sort of things. Where do you see it heading? Like, it's great to do all this kind of action, but what does it mean for the for people out here?
It actually means a lot, because um, from a functional standpoint, uh, you can do most of traditional finance on chain. So there's a lot of DeFi that you actually don't need that much regulatory change for. Uh, you just need to get the licenses, and it's expensive, and all that stuff. But uh, that's not really going to change anytime soon, even with the new Treasury bills that are out there. What it does do, on the other hand, is that it normalizes tokenization, and it normalizes blockchain to the point that bigger organizations feel comfortable in dealing with these new technologies. And that that credible narrative, when the RBA comes out and says, we're actually testing this thing because it's a real thing, means that the big banks, for example, or the bigger financial institutions acknowledge that it's not just a bunch of criminals, but it's a bunch of criminals and utility. And that
There you go.
extra utility is
Thank you, Michelle Bullock. She said that, right?
I think she did, yeah. We're normalizing criminality. It's not only for the top. Um, so what that means is that all of a sudden we can actually start building out these innovative products, and people will feel more comfortable using them. And we see that a lot. We see that from companies that actually reach out and say, hey, how can we be involved? And don't get me wrong, the how can we get involved is because they want to look good, because it's it's a good topic. But that reason alone, even if it sounds like it's it's a marketing reason, which it is, it's extremely valuable, because it's better to want to be part of the marketing than not to be part of it at all. And therefore everybody is kind of shunned out because tokenization is bad, which was what was happening before.
Is it
Right?
kind of like when you walk past a really busy restaurant and you see a restaurant next to it and there's no one in there,
You just don't go in.
and you just don't go
Yeah.
in? So like by having
Yeah.
these people involved, is that like an analogy that you
Yeah,
think?
it is.
Yeah.
It is. It is just as simple as, right?
All right, I'll win.
Now, there are a few things that are coming out from Acacia, and that are really, really interesting. And it maybe does get a little bit technical, but just following me on this one. And uh, there are there are certain structures or structured products called callable products. So what that means is that if I am an investor and I buy into this thing, then they sometimes have a feature where I can call capital from this product, right? That's really interesting. It's very useful, especially if you've deployed a bunch of, let's say that you've deployed $1 million, and the purpose for deploying this $1 million is to originate or buy up a bunch of invoices or assets, and it takes time to buy those things. So, you'll have unused liquidity for a period of time. It's nothing new to have that callability feature, but what happens is that let's say I'm a hedge fund and I've deployed X amount of capital. I need the capital today, and I'm allowed to, according to this legal agreement. And what happens is that I'll send an email to the issuer, usually it's a bank, and I'll say, can I please get $500,000 back? Somebody there reads it, and they will have their own legal opinion over, am I allowed to or not? Should I give the money back? If the legal opinion is yes, you are allowed to, then they'll start the process and they'll send you whatever it is that you asked for. Now, the two key things here are A, you might think that you have the right to call the product, but they need to agree to it. And that's not part of the agreement. Like, the agreement says that when you call, you give back. But the point is that when there's that legal agreement, there's always an opinion, right? So there could be scenarios where the issuer just doesn't have it or doesn't want to give it, and then they stall by saying, "Oh, you're not allowed because the moon is blue right now," or whatever it is, and you get into that legal conflict. Uh, what we've been able to devise here is uh, the same structure, but in a tokenized form, where the owner of a specific private key has the programmatic ability to withdraw funds from an account without asking for permission. Now, that's actually really, really big because uh, there've been multiple times. I mean, during Lehman, during every liquidity crisis, there's always friction, and that friction means that people pull liquidity, and nobody wants to give away that liquidity, and that's when you need it the most. And now we've actually shown that the only way in which you can achieve that level of efficiency and security in terms of being able to honor an agreement is by taking out that the let's call it the legal argument piece, because you're literally cryptographically programming the access to that asset and your ability to pull it back. That's never been seen before, and what we're doing is taking it a bit further, which is that you're able to call CBDC. Now, let's just think about that. CBDC is literally cash. Now, none of us, unless you have cash in your pocket, have actual cash, right? Everything is credit. It's a deposit with a bank. So if we were to replicate a product where you were at will able to call out cash, i.e., withdraw cash, you'd literally have to create a fund where I, as an investor, also get a physical key to a physical vault that I can walk into at will whenever I want, without even identifying myself, right? Just I walk in and I empty that with $500,000. When I say it that way, it sounds ridiculous because obviously you would never allow to be able to structure a product like that. But when the shit hits the fan, what you want is cash. And here we've been able to devise that structure where at will the investor is able to call with this key and extract cash, and it's actually fully compliant. There's no issues around legality, and like it's never been done before. So there are actually very few examples that you see out there of why blockchain and why a CBDC, and uh, questionable over, do you really need to have that CBDC because everybody just actually lives off credit today unless you're a big bank. But why blockchain? Yes, because then you're not able to achieve that level of control over your own money, right?
It's a shame that we weren't doing this years before the looming AI bubble bursting, but everyone obviously, I mean, the people lining up for gold at Martin Place that you still see every day, they are definitely ahead of the curve there. But to your point, I mean, protection is something that you think about after the event. Insurance is the greatest product to buy after the fire. It's a shame, but hopefully with the stuff that we're doing, and who knows how big Nvidia is going to like blow, you know, the bubble, etc., etc. But it just goes to show that we are so close to having these things in place. Maybe it'll be the next bubble that we save in a better way. But thank you for your time, Arturo. There's a whole heap of questions that y'all will probably want to ask him, like where's that accent from, and you can figure that out later in the networking. Thanks for your time.
Thank you.
Peace. All right, next up on stage, the man, the myth, the legend himself, the founder of Redbelly Network, Vincent Gramoli. Come on down. Do you want to, yeah, you're going to do the slides?
Yeah.
All right. All yours. Do you want to hold and just click?
Yeah.
Yep. Okay, cool.
Thank you, Mark.
Vincent.
Okay. Thank you, Mark. Can you hear me at the back? Yeah, all good. Great. Yeah, so I'm Vincent Gramoli. I'm the founder of Redbelly Network. How many of you have heard? Oops, that's probably mine. How many of you have heard about Redbelly Network before? Can you raise your hand? Okay, so I'll just say a few words about it. But most of the crowd have heard about it. So you know that it's a layer 1 blockchain that was built here in Sydney, in Australia, and yeah, I will explain a few things. But I just want to mention that I'm also a professor of distributed systems at the University of Sydney, but here I'm representing Redbelly Network today. We're going to talk about real decentralization. But before that, sorry, I forgot, but I have to tell you a story. So last time it was, last time that the Friday was 13th, like number 13 in the month, it was in June this year. I'm not superstitious. But what happened on that day is that I got a call at 4 a.m. in the morning, and it woke me up, obviously, and it was coming from the alerting system of Redbelly Network. So in the middle of the night, the alerting system that runs 24/7, as you can imagine, of Redbelly Network, which is a distributed systems of machines, decided to call me because there were some machines that were going rogue. And then I got this. So it will typically call you multiple times so that your phone will ring even at night. And then I got woken up in order to deal with a problem with the machines of the Redbelly Network. And the reason of this call and why I was awakened so early is actually a global Google Cloud platform outage. So you might remember that it happened on the 12th of June, which was 13th of June here in Sydney at 4 a.m. in the morning. And essentially, most of the machines of Google Cloud were out of availability. So they were not accessible. And this had a huge impact on many services like Cloudflare. So you may not know what is Cloudflare, but it acts as a proxy for a lot of web services, right? So we're talking about Web 2, the internet. So a lot of internet services were down, and that was due to a bug that was released on all the machines in the Google Cloud at once, because of course everything is automated. And as you can see on this map, there were a lot of regions that were affected. Right, so we heard about it in the news. Major website experienced technical issues amid the widespread internet outage. They also mentioned Spotify. You might be more familiar with Spotify when you want to listen to your music. Spotify relies on a single cloud provider, which is Google Cloud Platform, right? So as soon as you have this dependency on a single entity, which can be Google, Amazon, or something else, then you are at risk if this organization cannot provide a service at some point in time, right? And that's why decentralization is so important. There are other articles that came up, like Google Cloud caused outage by ignoring its usual code quality protections. So I think the developers were unlucky on this one. There is a process that guarantees that the bug should not be propagated and it should be carefully tested. But because of some new releases, they bypassed the testing process, and then this caused the issue that was undetected before. And finally, Google Cloud outage brings down a lot of the internet, again, because all these web services that are web like normal web that we use on a daily basis, not the Web 3, and they rely on this Google Cloud platform or other centralized platform, then this internet services are at risks. And that was in June, right? So at Redbelly Network, we do things slightly differently. And first of all, we decentralize things by geo-distributing the machines that we have. So this is a map of the current Redbelly Network mainnet, which is in production. We have 241 machines. As you can see, they're spread in 46 countries around the world, essentially on all the continents, right? So if there is an outage that is geo-localized and that affects large regions of the world, then there will be other machines that will take over. And the requests you send to these machines that are out of order will be redirected to some machines that will provide the service to you. And that's how, when I got woken up at 4 a.m. in the morning, it was pretty much for nothing, right? And the reason was that actually most of the machines of the Redbelly network were up and running. There was no problem whatsoever. It's a good thing that the alerting system will call me. But at the end of the day, if you look at the y-axis here, it goes up to 108. What you cannot see is it goes down to 0, right? So the proportion of machines that at 4 a.m. in the morning got unavailable, not available anymore, represent a very tiny portion. It's probably, 95. So maybe, 13 machines that were not available at some point in time out of 108, right? It's not exactly number of machines, but services that were probed continuously, right? So he woke me up just for this tiny amount of services that were not available, which was not a big deal. But the bottom line is that we couldn't explain, the alerting system couldn't explain why Google Cloud was not available, while the VMs that were running on Google Cloud were not doing their job. That's why it called me. But in the end, that was a relief to see that the system was up and running all the time. And since we have launched the mainnet, which is about a year now, I can say that we have been very successful because the SLA, the service level agreement that we have offered, is 100%. Usually cloud computing services would offer 99.9% of availability. There is another problem that came more recently. On October 10th, the crypto market experienced what we call the crypto crash now, right? That's the worst crash that happened since the beginning of cryptocurrency, let's say in 2009. Bitcoin went below 100,000 US dollar, while it was much higher. Ethereum lost 10% in value. Ripple XRP lost 17%. Binance lost 7%. And they were crypto liquidation that exceeded 20 billion US dollars, right? So that was a big deal. You might have heard about it in the news. 217 million gone in 24 hours. There were a lot of liquidation happening within a very short period of time. And what was interesting is that Binance, of course, Binance is a centralized organization, but Binance had a role to play. And what happened is that in Binance, they estimate the value of the collateral in order to decide whether liquidation should occur. You have a lot of trade boats that will liquidate some assets based on the value of these assets or their collaterals. But because Binance do the estimates centrally, there is a risk that they do things wrong. And what happened was that actually this estimate was completely out of the reality. And this caused extra liquidation that participated to the crash. Since then, there have been some announcement from Binance where they confessed that there were technical glitches as well. But they also mentioned that it was not the primary reason of the crash. There were other factors that affected this, right? But Binance had a role to play in the crash as well. And they have also offered to compensate some of the losses during the crash, up to $300 million, I think. So you can see that if a central organization takes some decision on its own without looking at what's happening in a decentralized fashion in the real world, then there is a risk that a crash can happen, right? And in this particular case, that's a crypto crash. The nice thing is that Redbelly also has a need to estimate collaterals in its network, just because Redbelly Network provides transaction fees that are fixed or pegged to the US dollar. right? So when you send a transaction, the price will not vary depending on the cryptocurrency you pay this transaction fee in. The price will be pegged on US dollars, so it's much less volatile, like the US dollar. Essentially, for those who know the concept of gas in Ethereum, if you consume 21,000 gas in Ethereum, or the equivalent in Redbelly Network, you will only pay 1 cent of a US dollar. Right? That's how Redbelly works. But for Redbelly to offer this service, it needs to know at all point in time the exchange rate between the US dollar and the Redbelly Network coin, the RBNT. So how does Redbelly does this? How does it do this? It uses a decentralized environment of machines, right? It doesn't want to do the computation or its estimate on its own because we don't want to risk to misestimate the value of the assets in the Redbelly network. That would be too dramatic if we make a mistake. So instead, we have a distributed environment with oracles, and these oracles will gather a series of inputs coming from different decentralized or centralized exchanges. It gathers this information. And the nice thing is that this distributed system of oracles doesn't need all the inputs. They will select a subset of these inputs. And this will guarantee that if one of the input goes rogue, then they will disregard the input that comes from this crazy exchange. Just to give you an idea on how it works, it's simply using the median of the median technique. So they gather a subset of the medians and they agree on a report of the subset of the values that they were observed. And then what they do is they take the median value among all the medians that they received, right? In this case, it would be 0.3, just because the medians were 0.29, 0.3, and 0.31. So the median of the medians is 0.3. By doing that, you remove the outliers. What I mean by outliers could be the values that get completely crazy. And this is how Redbelly, for example, did not misestimate the exchange rate between the US dollar and the Redbelly Network coin at some point in time, even though one of the exchange was reporting a wrong value for a very long time. This did not affect the estimation of the exchange rate, right? So the fact that we're doing this decentralized computation and we remove the outliers and we based the result of the computation on the median of the median means that we can cope with this type of problem. Otherwise, we would have had the same problem as Binance here if we hadn't had this technology and if we were trusting Icarus as a valid input at all times. That's why decentralization is important, and you cannot trust a centralized exchange like Icarus. And even a more recent issue that I will mention here is the AWS outage. How many of you have heard about the AWS outage? Yeah, it was a big deal actually, right? It was even worse than the Google outage from June. So there was this news article from the BBC, what caused the AWS outage and why did it make the internet fall apart? The fact that it made the internet fall apart is really illustrative of how much we rely on centralized services like Amazon Web Services in order to do our computation and to get our internet services. There was also an article in the ABC. I found it funny. They interviewed one of my co-authors, Ken Bierman at Cornell University, who said that software developers need to build better fault tolerance. And fault tolerance comes from decentralization. And the reason why Redbelly did not was still available at all times, despite the AWS outage and the Google Cloud outage, is actually that we rely on multiple cloud providers. Again, there is this notion of decentralization that is underneath the Redbelly mainnet, right? So we rely on Google Cloud Platform, obviously, AWS, Amazon Web Services as well, but also OVH, which is a French cloud provider, and Etzner, which is a German cloud provider. And in addition to the machines that I've presented initially, where I said we have 241 machines spread over all the world, these were machines that were mainly coming from individuals who are contributing to our network. The thing that I didn't mention is that Redbelly Network at its own machine, so Redbelly Network as an organization, controls the execution of some of the machines of the network. And these machines are spread strategically across Sydney, Finland, Germany, UK, France, and Ohio, Iowa, and Oregon in the US. And they're also spread equally across the 4 cloud providers that I've mentioned. And this guarantees that if one cloud provider becomes completely unavailable, you will have access to the Redbelly Network service. And this is true also just for the machines that are controlled by Redbelly Network Company. I'm not even talking about the machines that are contributed by individuals, because as you can imagine, they may run it in different places, maybe their home or another cloud providers maybe. Okay, so this concludes my talk. I just wanted to explain that Redbelly Network is a layer 1 blockchain that is based on decentralization at all levels. I could have gone further and explained that there are some blockchains technologies that use a consensus protocol that is centralized in the sense that it uses a leader, but it would have been a bit more technical as a talk. Redbelly Network doesn't use any leader, and it's based on a consensus protocol that is called Democratic Byzantine Fault Tolerance for a reason. It's democratic, and it's not based on a leader. If you want to have more information, we've just released the decentralization roadmap that explains how we're going to invite new node operators, could be individuals, in order to join the network, and of course they will be rewarded for that, to running the service of the Redbelly Network. I also want to mention that at the moment, we already have opened the program a while back in order to accept new node operators. We received a lot of individuals from overseas. And for currently, we're looking for large Australian businesses to also join as node operators. So thank you for your attention.
If you stay up on stage, does anyone have questions for Vincent? This is a cool opportunity. We haven't had you there. A few. I'll go to Karen first. I'll swap around. I'll give you.
I can speak loudly.
Yeah, here, hold that. It's just for the recording, and then I'll put that there. Okay, cool. All right, here you go.
Thanks. Thanks, Vincent. That's awesome. What about Asia for your cloud services as well?
Yeah, there is Alibaba Cloud. There are others that we have been considering. That's a very good point. They are next on our list.
Quick question. Thank you for the presentation. You talked about decentralization, and I was wondering if you can maybe explain a bit about redundancy and redundant architecture that you displayed around the 4 cloud providers. And what will happen if your head of technology services became a rogue employee of Redbelly and suddenly plants a bug that shuts down your whole network by an insider attack?
Yeah. In terms of the redundancy, so of course, Amazon Web Services or Google Cloud Platform are distributed systems, right? They use redundancy, and they usually try to make sure that that they don't have, if there is a failure like a hard drive that dies, then they have a replacement for that. What they don't have is an ability to not replicate the bugs, right? Somehow. So if they decide to release a bug, they usually release it on a large number of machines. So the replication is really mirrored, and because of that, the bug will propagate. In terms of employee risks, this is a very serious risk that we have in our organization. Social engineering is becoming more and more elaborate. What we do is we didn't reinvent the wheel. We're using multi-sig wallets for most of the important decision that relates to the network, which means that as the CTO, I couldn't, for example, decide to exclude some of the Redbelly Network node from the governance of the mainnet, right? I had to sign it and wait for several of my colleagues to sign. So a quorum of us would have to sign in order for the action to be taken. That's the current remedy that we have.
Great question, though. Any other questions in the room? Good chance to to ask. Right at the back, let me just run down there, get my steps up. Yes, sir. Here you go.
Hi. You mentioned AWS and the Microsoft outage, and then compared it to your system, how it was still available to some extent, way better than decentralized. So then in 5, 10 years, potentially 15 years, what would be the end goal then? Would the end goal be then to replace all these centralized components with something akin to Redbelly or Redbelly itself?
I'm not sure about that. So the cloud outages that I've mentioned, it was Google Cloud Platform and Amazon Web Services. My point is more that we know the internet as it is today, and we rely on services that are dependent on a single company usually. And it's often you don't even know, right? When you listen to Spotify music, you don't even know that it relies on Google Cloud Platform. So you don't know when Google Cloud will have an outage that you will not be able to listen to your music, right? What I'm advocating for is that using this Web3 technology, you have the ability to choose a platform that offers Web3 interfaces like Redbelly Network that relies on multiple cloud providers, and because of that will be much more tolerant to disasters, to failures in the future.
Very good. Another round. Any questions for Professor? Okay, one more up here, and we'll probably round out not long after that. Go ahead, sir.
So my question is, why another layer 1 blockchain? So there's so many layer 1 blockchains that they're all decentralized to some extent, right? So why another layer 1?
Yeah, that's a very valid question. I like this. Personally, I think any country, for the sake of self-sovereignty, should build its own blockchain. That's it. You should not rely on some cryptographic libraries that you've been given to by someone else. Of course, we're relying on some existing cryptographic libraries, so we cannot just build everything from scratch. But as a cybersecurity software like a blockchain is, I think it's very important that every country has its own technology. So Redbelly is in this sense Australian, and we're very proud of that. But beside that, there are different models that offer different perspective, right? So you might like to use a forkable blockchain. So a blockchain where consensus is not resolved immediately, and you might have to wait for X confirmation for the probability that your transaction is committed to grow exponentially fast with the number of confirmation, right? If this is what you like, you go for it. It might be great for meme coin. It might be great for NFTs. It might not be great for your mortgage. It might not be great for your properties. It might not be great for real-world assets that are of high value, right? And for these type of assets, you might look at a different model, which is more secure. And what we do at Redbelly, we provide certainty. We don't have fork because we solve the consensus before appending the block. So you have only one block at each index. And it turns out to be extremely valuable in, for example, the project Acacia that Arturo was talking about, where essentially Reserve Bank of Australia would like to have certainty, instant finality, no counterparty risks, so instant settlement. And for that, you need a blockchain that has a different design than what was used, for example, for meme coin, let's say 10 years ago.
We've got a great question. We've got another one here, and then I've got a question for you.
Oh, thank you. Thank you. You mentioned about node operators, and could you just explain more? Were you after institutional only node operators or individual node operators, and would they be spread across like the world, Australia?
Yeah, so we want diversity. To go back to the initial message, we want decentralization also in the sense of diversity. Not only should they come from a different company, ideally, the nodes, but they should come from individuals, people in different regions. And since we got, I think, 3,000 applicants that were mostly individuals from foreign countries, what we would love to have is also institutional nodes coming from Australia that would balance a little bit, and we would have more diversity. And because we're in Australia, would make sense.
Individuals from Australia.
And individuals from Australia is also desirable as well. Yeah. So yeah, that's a good point. So they're going to be around open soon, but I just wanted to mention that we will favor right now, because we need Australian institutions. If you have an Australian institution that is happy to run a node, then reach out to us. But sooner or later, sooner, it should happen, I guess, in next year. It's part of the roadmap where we will open it up to everyone. And again, I guess we will have, applicants from all over the world.
Fantastic. Question I had was just given that you come from an academic background and, still teach, and we've had some students of yours here as well. We often hear from the institutions, as you're mentioning there, but I'd like to understand for the crowd, like, what are you seeing from that academic, from both the students and their learnings and how, blockchain is now becoming part of the curriculum there, but also from your teaching side and the research that you get to do. Could you shed some insights into where you see things heading in terms of that educational side of things, given that you're so close to it, and arguably Redbelly would not be here had you not been in that academic space that you're in? Could you shed some insights into
Yeah,
that?
I think, a few years back, people were wondering whether blockchain was a buzzword. That's a valid question, right? I remember 2020 or 2021, the most demanded skill on LinkedIn was blockchain, whatever it means, right? It could be programming Solidity to, I don't know, distributed systems or game theory, cryptography, and so on. But blockchain was the keyword that was most looked for in terms of hiring. I think it has changed a bit. Now there is AI, of course, but the things, and maybe blockchain will become something that we won't talk about in 10 years' time. But I think what we're teaching right now, and especially in my course, I teach the foundation. And this foundation will be relevant no matter what, right? Because we're talking about cybersecurity software, and this is very important. So all the technologies that you're learning, like hash function or consensus or Byzantine fault tolerance, all these concepts that are foundational to blockchain technology might be used later in other cybersecurity software, but will still be relevant. So maybe tomorrow we'll come up with a new buzzword, but I still think that it's going to be extremely valuable to have this knowledge of blockchain technology.
Things are changing all the time. It's only a few days ago that Google reckoned that they've had a quantum kind of breakthrough, all this stuff about quantum not being all that great. And now they've found that they are actually finding useful things out of it. So you're right, things will continually change, but the principles, to your point, I think are are going to stay the same. Tongue twister there. But Vincent Gramoli, Professor Vincent Gramoli, thank you so much for your time. If anyone has any questions, please feel free to join in the networking. You've got the decentralization roadmap right up there. Thank you.
Thank you.
Yes. You're good. I've got that. Yeah, available. Thank you.
All right, folks. Thanks so much. We are getting to the wrap up. I wasn't able to get Lisa on the call, but just to give you some further ideas about like Fableration and the stuff that they're doing there, and I'll get their QR code back up. What's going on here? My computer's stuck. That's great. But in any case, yeah, Fableration are doing some really interesting things in the space, and there's still all of these competitions. All of this is recorded as well, folks. So if you want to go back and go through all of the things there, you can see that. For some reason it's gone forward and it should have gone backward. That's okay. Kraken, we thank them. We would not be able to do this event without them. They have signed on to be the major sponsor into the next year. So amazing stuff. There is going to be a whole bunch of activations and prizes, rewards for participation. We're going to start getting back into, and I know there's been some great people that have been coming to each of these events, but I want to get back into something where we're actually rewarding you for coming to the events. I remember when South by Southwest Sydney first came to Sydney, because it was the first time they did something outside of Austin, Texas, and it was a big, opportunity to showcase at the time what blockchain was doing. We were going to do something with Innovation New South Wales. It didn't get off the ground, and that's okay. But imagine you go to an event, and if you're there at the start, you scan a QR code, gets you an NFT. You stay till the end, you scan a different QR code, and you get like a different NFT, and you get rewarded for participating at that event. Now, sure, you could run around to all the other events and not actually participate, but hard to do. Good effort if you are that fit. But then the other part being that having AI as part of the mix, being able to see what the speakers are talking about before the event, seeing some materials, seeing something like Vincent's roadmap so you can load yourself with questions, having the AI that could help you with that. That events page that we've got on Aus DeFi, we'll be doing some more of that so that when you come to these events, you are loaded with, what you could be talking about or asking about there. So we thank them. This is an important thing as well. I encourage you to scan the QR code here. This is staying with crypto. It started out of the US, is something that came from the group at Coinbase, but is open to so many in the industry. This is something out there that is all about lobbying. It's about showing the signatures, showing the support. You know, they had 11,000, and this was like back then. I don't know what they're up to now. It's probably well above that. It was in the lead up to the election, but they've got a register on their website, both in the US and here in Australia, because they've got a different one for Australia, where it shows which politicians are actually supportive of this space, which are not, what their stance is, how many are neutral. So really interesting stuff, as well as other resources. And they do that pitch night. So that's on this Friday. When you follow Aus DeFi on LinkedIn or on Twitter, we'll be sharing more details about where you can go to watch those, because I think it will be streamed live. Ourselves are on there, as well as the Digital Economy Council of Australia. That's the peak industry body. We do a lot of stuff with them in terms of connecting with politicians in Canberra and advocating for this space and running national events, all things blockchain as well. Take3, who is also a sponsor, they're a great marketing agency focused on Web3 and others, and Upside, which is a community down in Melbourne. And then finally, the Aus DeFi links there. So we get to this part where basically you get to network now. We have this space until just after 8. So I thank you all for being so patient, joining in, braving the weather. And if you have any questions from any of the speakers that we hear, some awesome people in the room, some folks that are working in this space and just interested, please do let us know. There was a lady who was looking for a technical co-founder for a project. Put your hand up, please. So this technical advisor. So if anyone is interested in having a chat on what sounds like an interesting blockchain NFT arts project, sorry, I don't know if there was an NFT part to it, but there was an arts element to it. Please do have a chat, and please do go network. Thank you so much for your time. Cheers. I'm done.